I look at the Fed still tightening. And the last thing that always usually falls is the stock market. Just look at your history. I remember 2006 and 7 was tough, just like Big Short. I was short a lot of stuff and I didn't get paid back until 2008. It's just the way it works and people get stopped up. But there's two things. One thing I want to mention is what's happening with Case-Shiller. Bitcoin, I completely agree, but it has major competition like gold does from the US, the base currency, giving you the best rate on the planet and the deepest treasury market.
After 10 consecutive rate hikes in slightly over a year, the Federal Reserve paused its aggressive monetary tightening last month to evaluate the U.S. economy's health and the effects of recent banking stresses on lending conditions. Recent economic growth upgrades and moderate inflation data have further supported the probability of the Fed's rate-setting committee approving a 0.25 percentage point hike on July 25th to 26th. This move would elevate the federal funds rate to a range between 5.25 and 5.5%, reaching its highest level since 2001. According to Mike, Bitcoin could be one of the first assets to show the effects of this change. He believes that the Fed will continue tightening, and the ongoing rise of the stock market might become a concern, potentially making the situation worse. U.S. stocks are poised to make slight gains, and the market awaits the Federal Reserve's approach. Currently, Bitcoin's annual volatility is now only twice that of the Nasdaq, a significant decrease from the over 8x gap seen in 2017. For broader adoption, Bitcoin needs to demonstrate its ability to outperform the Nasdaq, particularly during a recession. Up about 100% from the 2022 low to around $30,000 on July 19th is a good bounce for Bitcoin. McGlone believes that if Bitcoin fails to rise higher than the current $30,000 level, it may be a bad sign for the whole U.S. economy. In this tweet, he said, stalling at about $30,000 amid hype about potential for an ETF launch and the seemingly unstoppable stock market, a Bitcoin pause may signal bigger economic issues. We would like to share some highlights from the discussion with you. Before we continue, please remember to subscribe to the channel and click the bell icon to receive more updates.
Well, let's start with market expectations. You look at the WIRP function on the Bloomberg terminal. It says 92% that they're going to raise another hike on July 26th, and they're going to keep raising, and we're not going to get a cut until March. Now, this is what a lot of economists think, but it doesn't matter so much when the market's already priced for it. So I look at it, it's still simply a fact is the market, the Fed is still taking away liquidity, and most risk assets are expensive, completely expecting this soft landing. And the whole narrative is termed that, oh, we're not going to get a recession. The Fed's still tightening. Everything's okay. I look at this as one of the most offside markets in history, and the risk reward is just not good. And so if my scenario kicks in, which I still think it's going to, with we'll let Anna comment on this. You get the normal reciprocity from all this tightening, and it shows up in the economy, but in a delayed reaction. Bitcoin should want to be the first ones to show it. So right now, the Fed is still going to keep tightening. And what's going to keep them tightening if the stock market keeps going up? It's still that same issue, which is a problem. And I look over at Bitcoin as, yes, I'd love to be bullish Bitcoin, but if you look at that price right now at 30,000, the first time it traded 30,000 was right at the end of 2020, right at the beginning of 2021. And if you look, so it's unchanged. You look at the NASDAQ over the same period, it's up 20%, yet the volatility in NASDAQ is half that of Bitcoin. So right now, yeah, Bitcoin's great. It's got all this ETF coming on. We have the hopium for the ETF. But if the actual performance versus the NASDAQ, which has got AI and everything going for it, I look at it as I'm disappointed. And I think it's still the problem is I sense so much bullishness. But yet the macro is very unfavorable. The Fed is still taking away the punch bowl. I'm indifferent about the dollar. You look at the versus the Dixie, which is mostly Europe. You look at the trade-weighted broad dollar. It's basically in the middle of the range it's been in for the last 5 years. And as Anna mentioned, there's a good reason, I guess, for it to pull back a little bit. But the key thing to remember about the dollar against a broad measure of currencies, it only goes down after it goes up a lot, and it went up a lot. Into the massive Federal Reserve and fiscal stimulus and monetary stimulus we had into that peak in 2021. Now it's coming back. I don't know how much lower it goes, but in terms of, I do enjoy when people equate it directly to Bitcoin. It's a small factor. And I think the actual price of Bitcoin now in the gold and copper, it's a much more significant factor, much more established commodities. that are basically the inversion of the dollar. With Bitcoin, it's much more, okay, what's the supply demand issue, and is there going to be an ETF from BlackRock?
On Friday, during the first heavy week of earnings results for the second quarter, the Nasdaq made fresh 52-week highs before cooling off. The composite index closed down 0.6% for the week. According to McGlone, the stock market's persistent upward trend keeps the Fed on high alert, as it implies that there might be a potential train wreck ahead at times. The Federal Reserve has made significant progress in curbing inflation, as U.S. consumer prices rose 3% in June on a yearly basis, a considerable decrease from the peak of 9.1% recorded last year. The Fed's target is to maintain the inflation rate at 2% annually. McGlone emphasized that the producer price index chart should also be taken into consideration.
You will see the stock market drop 50% and stay down and not make a high for 10, 20 years. It always happens, and always happens after the biggest pumps in liquidity. That's what I look at this as a lose-lose. The fact that the stock market's still going up keeps the Fed still vigilant, means there's going to be a train wreck at some point. Something's got to end. I don't know what it's going to take, but you look at all the, like I say, PPI minus 3%, and they're still hiking. I've never seen that in history. And of course, our data is only since 1948. I had to bring up some charts and things I've been focusing on for a while. And that's, first of all, let's start with U.S. new homes under construction. It's the highest ever. I go back to 1969 on this one, and the chart looks just like it did in 2006-7. It double topped and then collapsed. The big difference was back then as the Fed started easing in September 2007. Big difference. And also we have this massive spike in interest rates. Yes, we're freezing up the sell side for people who do not want to sell their home and refinance at a higher rate. But since when is seizing up a market good for it? And another chart it made me bring up is we just look at producer price index, is the year-over-year measure. It's at minus 3%. It's only happened 3 times in history since 1949. This is the finished goods measure. And it's never happened with the Fed funds rate still rising at, I'm just using a 3-month bill, at 5.28% at the moment. This has never happened before. And I look at it as, okay, maybe the whole rules of all the lessons of economics and liquidity and cycles are no longer accurate.
The Federal Reserve has already implemented a series of rate hikes, bringing its policy rate to a range of 5% to 5.25%, the highest level since 2007, achieved in a relatively short span of 16 months. There is an expectation of another 25 basis point rate increase on Wednesday, after which the Fed may conclude its tightening cycle. However, history shows that rising rates and tighter financial conditions usually have negative implications for stock portfolios, with most tightening cycles leading to recessions since 1970. As for Bitcoin, McGlone maintains a positive outlook and would like to adopt a bullish stance on it. What is your stance about Mike McGlone's bullish outlook for Bitcoin? We encourage you to share your views in the comments section. If you found this content informative, please give it a big thumbs up and subscribe to our channel for the most up-to-date news and videos. Thanks for joining us.